All right, let's break down some of the biggest economic stories happening right now. We're going to look at a pretty wild forecast for the year ahead, dig into the real fallout from the US government shutdown, and figure out what it all means for the markets. Let's get right into it.
Okay, so let's start here. Every single year, the Economist magazine puts out this cover that a lot of people see as, well, kind of prophetic. It's packed with symbols and clues about the year to come, and this year's edition has absolutely got people talking.
So what are we actually looking at here? I mean, first thing you notice is just a ton of military gear, drones, tanks, rockets, which suggests conflict is going to be a huge theme. Then you got this cake for America's 250th birthday, but it's sitting right next to a big old downward trending graph. Not exactly a party vibe. Add in some crossed swords, a cracked gavel, plus pills and syringes, and the picture it's painting's pretty clear. A year dominated by conflict, economic worries, and some serious questions about justice and health.
Okay, so moving from forecasts to something that just happened. The US government shutdown. It seems like it's over, with Washington reaching what they're calling a temporary truce. But, the story is really far from over.
And there it is. 43 days later, the longest government shutdown in US history is officially over. But, and this is a huge but, don't get too comfortable. This whole resolution feels a lot more like someone hitting the pause button than a real permanent fix.
So, what does this deal actually mean? Well, it's pretty shaky, to be honest. First off, the funding is only temporary. It runs out again on January 30th. Second, there's a whole new political fight over healthcare benefits already scheduled for the middle of December. And maybe the biggest thing, for 43 days, we collected almost no economic data. That's a massive blind spot, which means we're all kind of flying blind right now.
So, the shutdown's paused. You'd think the markets would be celebrating, right? A big sigh of relief? Well, not exactly. Instead, we're seeing this really weird and kind of worrying trend pop up. Divergence. It's where different parts of the market start telling completely different stories.
Yeah, market analysts have a pretty intense name for this phenomenon. They call it the jaws of death. As you can see, it's basically when two things that are supposed to move together, things that are historically linked, suddenly start pulling in opposite directions. And when those jaws open up, it can be a major warning sign of instability under the surface.
And one of the first places we're seeing these jaws open up is in the AI sector. It's wild. On one hand, you've got AI stocks with these sky-high valuations. People are just piling in, full of enthusiasm. But on the other hand, you've got the credit markets, the folks who loan out the money to build all those massive data centers, and they're starting to get really nervous about all the debt being used to fuel this boom.
And this split isn't just some niche thing in AI either. You can see it clear as day in the big indices. The Dow Jones, which is full of older, established industrial companies, just hit a brand new high. At the same time, the tech-heavy NASDAQ has been seriously underperforming. Actually, the Dow has been crushing the NASDAQ ever since Halloween.
So this divergence thing, it's not just stocks. Let's do a quick lightning round and check out what's going on with commodities and crypto, because the story gets even weirder there.
First, gold. It's been on a nice run up, mostly thanks to the US dollar taking a bit of a hit.
But silver? Silver's doing even better. It's really outshining gold lately, hitting new highs and showing some serious strength. Pretty impressive.
Meanwhile, over in the energy world, oil is headed in the complete opposite direction. Prices have been dropping, and that's mostly because OPEC is getting worried about a global oversupply, which has pushed WTI crude down to around $58.
And what about crypto? A lot of people thought the end of the shutdown would bring a flood of money into the space. Nope. Instead, the crypto markets have actually been trending down, and related stocks like MicroStrategy just hit their lowest point of the year.
Okay, so let's just recap for a second. We've got stocks splitting apart, commodities are all over the map, crypto's down. What on earth is actually going on? Well, a top analyst at Goldman Sachs gave a pretty cynical but also, incredibly insightful take on it all.
And this quote really just cuts right to the chase. Wall Street is now clearly above Main Street, but from an S&P 500 perspective, it's close to perfect. Wow, that's a really powerful way to put it, isn't it? This huge disconnect between the health of the market and what's happening for regular people.
So what is this near-perfect world for Wall Street?
Well, here's the playbook. The markets actually like lower interest rates. And yeah, a slowing economy. Why? Because that's when companies can really boost their profits through automation and, well, job cuts. It's a setup that puts shareholder returns way ahead of the workforce. And for the S&P 500, that's almost perfect.
as long as things don't get so bad that it triggers a full-blown recession.
Which leaves us with this huge, lingering question as we watch all of this unfold. What is really driving the market right now? Is it actual, real economic growth, or is it just the expectation of it? Something to definitely think about. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.